Hello, everybody. Welcome to my Wiley solution walkthrough. This is for accounting tools for business decision making. This is the 8th edition. This is exercise 1310. Textbook authors are Paul Kimmel, Jerry Weingan, and Jill Mitchell. This material is copyright 2023 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. Not sure why else you'd be using it. Being that the video may not be distributed or redistributed without the express permission of Wiley. My solution presentation is copyright by Bennett Tchaikovsky, who is me. All rights are reserved. The information, the opinions contained within this presentation are those of myself and not the authors of the textbook or of Wiley. So before we say thank you to the bus driver and a terrible dad Fortnite reference, let's go ahead and take a look at our different things we're going to be doing here today. So when you go through and are going through and doing ratio analysis, right? If you're taking my class, I will be providing you with the ratios. Why? Because they are pretty much meaningless to memorize. I even think on the CPA exam, you can actually, I think they give them to you. But let's just kind of go through and see what they're asking us to come up with. So the first one they're asking us to do here is profit margin. Okay, so let's ask Google, what is the ratio for profit margin? And then let's take a look at this. Oh, profit margin defined. Thank you, Investopedia. Let's see here. And what's the ratio? Okay, so over here. So this is gross profit margin, and then they have a bunch of different ones, right? So when they're referring to gross profit margin, right, this to me, when you look at net income, this is something that I kind of look at as a, right down here, it's like, well, what's the gross profit rate? You know, what are these different things? So the profit margin, you know, and the other part of this, when you're studying ratios, is that you're going to find different people call them different things. So they're defining profit margin, or Wiley is, which I think is correct. The profit margin, or what they're calling, it's really the net margin, is going to be your net income divided by your net sales. So what this would be over here, and we're only doing this for 1 year, my net income is going to be, let's see here, for 2025, my net income is 75.90. I divide this by net sales, and my profit margin is about 1%. Is that good or bad? It just depends on the industry that you're in. Every single business is different, right? But this is how we go through and compute the profit margin, also sometimes known as the net margin. Again, if you're taking my class, that's how we'll go through and do it. Okay. Next one it's asking us to do is the asset turnover ratio. So let's go stay with Investopedia. Okay, so asset turnover ratio definition. So this is the defined, and it's going to be total sales divided by beginning assets plus ending assets divided by 2. And that's basically, it's your average total assets. So this is basically saying how well is a company generating sales, right? So the higher the amount is, the better the company's performing, because it's going through and using those assets to generate sales. So the asset turnover is going to be my net sales divided by my average total assets, which is my beginning total assets plus my ending total assets divided by 2 is average total assets. Okay. Okay. So for this one right over here, my net sales are going to be 50, that's probably in millions, right? So it's 5.1 billion of net sales. What are my average total assets? Well, my beginning total assets, the amount that's at 12/31/24 becomes the beginning for 12/31, becomes the beginning for 1/1/25. So my average total assets are going to be 3,249.8. I'm going to divide I'm going to add in 2.9 billion. And this is going to give me over here, I'm going to divide this result by 2. So my average total assets are over here at 3.1 billion. So my total asset turnover is going to be 1.64 times. Okay, so my next one over here is it's asking me to do a return on assets. Okay, so let's look up return on assets. Okay, let's see if this is the right one they're using. Return on net assets is your net profit, sounds right, divided by, return on assets, hold on. This might be fancier. Company's earnings after tax by its total assets. Okay. So the earnings of the company, it says like here, the net income. So over here, we have return on assets. This is going to be my net income divided by the average total assets. Okay, my net income is 75.9 million. My average total assets are going to be the same number as up here. So my return on assets is roughly about 2.43%. Is that a good or bad thing? It just depends on the industry that you happen to be in. So don't look at a number and say, oh, that's the right one. It just depends on the industry that you're in. Okay. Next one I'm being asked to do after return on assets is return on common shareholders' equity. And let's see what that one is. That is going to be this is going to be my net income minus my preferred dividends divided by my average shareholders' equity. So over here, we do not have any preferred dividends for this question. This is not going to be a ratio that if you're taking my class, I will have you use. Okay. So my net income, 75.9. My preferred dividends are 0. Okay, so let's go over here. My average shareholders' equity, just like the one before, my beginning shareholders' equity plus my ending shareholders' equity. And if this result here is divided by 2, okay. So this is going to be beginning plus my ending divided by 2, or this will be right over here, 998.15. So this will be that value right there. When we come over here and look at this, so this is 0 in preferred dividends. So what I'm doing here then is I'm taking 75.9 and I'm dividing it by 998.15, or my return on equity is roughly about 7.6%. My gross profit rate, or my gross margin, the way I like to look at this is what you're going through and doing is you're taking what's gross profit, right? It's my net sales minus my cost of goods sold is my gross profit. Okay, my net sales were 5,121.8. My cost of goods sold is 3,540, 3.5 billion. So over here, it's going to be my gross profit divided by my net sales. And this is going to be my gross margin. So for every dollar I'm making on sales before SG&A, my profit margin is 30%. Now, is that a good or bad number? Again, it depends on your industry that you're in. Everything you look at here is extremely subjective. Don't look at it as being when you're going through and doing financial analysis in the real world. You have to ask yourself the question, what industry are you in? What's common for that particular industry, right? For example, Home Depot has inventory. Facebook has no inventory. So this is my gross margin or gross profit. I've heard it called both things, or basically I would call it my margin, not profit. Okay. So that's exercise 1310. I want to thank Wiley again for allowing me to continue to make these videos. Please don't forget to like and subscribe. If you're looking for other solutions, please feel free to ask for them in the comments. Have a great rest of your day, and I look forward to seeing you on the next video. Have a good one.